What is going on, everybody? My name is D. Anthony with EvolutionTraders.com. If you guys would like to learn more about myself and everything that I'm about and do and join the community, all of that stuff is down in the description box below. What we're going to be looking at here is the S&P 500 ETF, ticker symbol SPY. So a lot of day traders, a lot of options traders like to follow the S&P 500. Obviously, it's got 500 of your largest companies in it, kind of give you a good overall macro direction of the overall stock market, and it's a good liquidity trading ticker. So with that being said, I've got a lot of people in the community that solely focus on the SPY and trading the SPY and learning those technical levels on the S&P, because once you can kind of master one ticker symbol, and when I mean master, I don't mean that you're never going to lose a trade, but what I mean is you understand its movements. Okay, you understand its patterns, you understand the technicals when it has a little bit of trouble getting through supply, or when it seems to find some sort of support around demand. You kind of get comfortable with the price action and the movement, and it kind of helps to kind of focus on just a few tickers, especially if you're newer and you're just starting out. Hell, myself personally, I've been trading now going on, I think, 7 years and around 5.5 full time, but I still am trading the same tickers. I'm trading things like Tesla. I'm trading things like AMD, Nvidia, Apple. Those are my bread and butter ticker symbols. I obviously follow the triple Qs, which is a NASDAQ 100, and I'll play a little bit of the SPX, or I'll throw in, an oddball here and there, Meta, or, something like Roblox, or Amazon. I throw in some oddballs here and there, but majority I'm watching the same 3 to 5 ticker symbols each and every day, just because I'm comfortable with the levels and I'm comfortable with the way that those stocks move. So if we kind of look at what's going on here in the after hours session, obviously, Microsoft taking a big hit in the after hours from 250 all the way down to 233. We have Google taking a big hit in the after hours, Tesla taking a big hit in the after hours. Now, obviously, we know some of these are coming off of these earnings. And if I kind of just pull up Microsoft here, we can see big blow on Microsoft from a high today, and I can now adjust my level from a high today of 250, 270 all the way down to 233. Okay, so instead of trying to figure out why that stocks got pulled on earnings, let's just focus on what's going on technically in the chart so we can be ready. Unless you're a long-term investor, meaning that you've got a portfolio of thousands of shares or even hundreds of shares of Microsoft, where you kind of need the stock to gradually increase in price over time, it doesn't really matter if you're a trader, right? If you're a true day trader or a true swing trader, you can swing both long and short, especially if you're playing options, and especially if you're playing stocks or trading stocks that are very, very liquid, right? Like Microsoft is going to be very, very liquid. You're going to have no problem getting in and out if you are shorting the particular stock. So with that kind of being said and taken into context, I do understand that we as human beings are kind of hardwired to seeing things go up, right? It kind of always feels a lot better when the market is going higher, okay? I'm a victim of this as well. It seems like the sun shines a lot brighter when things are going up. It seems like, the birds are chirping and the butterflies are flying, and, everyone just is a lot more happy when we're in a more bull-biased market. But again, we have to be realistic. Not everything is going to go straight up. Obviously, if you've been trading these markets, as of late, especially this year in 2022, the markets, haven't given us that feel-good feeling. We get like a little glimmer and a little hope of that feel-good feeling, and then the market comes crashing back down. That's just the name of the game. It's called a bear market. We're going through very, very tough times as a nation and as an economy, and especially with the House that is in office right now, right? So with everything going on, taking everything into context, you are going to mentally drain yourself day in and day out trying to figure out the bit of news that is swaying the market. If you're solely focused on what is the 10-year yield doing, or you're solely focused on interest rates or the next CPI data numbers, or you're focused on the next PPI data numbers, or you're focused on the next Fed talk, or what is the president doing, or what's going on with gas prices, how is inflation, how's the jobs. Of course, all of this is going to play a big factor in what the overall markets are doing and what some particular stocks are doing. But trust me, you are going to physically and mentally drain yourself day in and day out trying to figure out and trying to guess and trying to be on the right side of where the market's going. Instead, if you just kind of pay attention technically, eliminate and close off all of the noise, and you just kind of solely focus on these squiggly lines that are on the chart, and you focus on the supply and the demand, everything starts to get a little bit more clear. It doesn't really matter if the stocks are going higher or lower. It doesn't really matter if the stocks are going sideways, as long as you kind of understand the macro overall picture of what is the next supply zone and what is the next demand zone. You can kind of paint and color in between the lines and make some money here, make some money there, couple of day trades here, couple of swing trades here. Now, obviously, you're not going to get those home run trades each and every single day. You're not going to win every single trade. That's just the name of the game. Trading is a very volume metrics game, meaning you have to have capital, you have to have experience, you have to have understanding of technical analysis, you have to have discipline, and you have to be able to keep taking those setups over and over and over again. Now, mind you, you might take 2-3 trades, and those 2 or 3 trades, if you follow a tight strategy and a tight system and use technical analysis, you might take 1, 2, 3 losses for, let's say, $100 here, $150 here, $100 here, but your next trade could run 2, 3, 4 days, and then you could end up making 4, 5, 6, 7, 800, even $1,000+ depending on your account size. Obviously, everyone's account sizes are different. I'm not going to speak in big terms here. Now, obviously, I can say you go in with $25,000 and you make 50% of that, then obviously you're going to make a lot more than a couple of $100. But again, I don't like to speak in those kind of bigger account holders kind of numbers, just due to the fact that it can kind of discourage people who might be trading with $1,000 account, might be trading with a $2,000 account. If you have like a $2,000 account and you're looking just to make a couple of trades here, kind of learn the game, kind of build your account nice and slow, you can take 2-3 options contracts, look to make 15, 20, 25% on $1,000. And it's good money, right? It's good money. You can make $80 here, $100 here, kind of stack that, slow grind it, and then consistently work on perfecting your strategy and perfecting, most importantly, your emotions. I've gotten way off topic here. We're going to be looking at the SPY very quickly. Could this be just a little bit of a break and retest? Obviously, we know that those earnings came in kind of pulling down the market here from that 385 price on the S&P 500. But if you kind of look at this linear regression channel here, yesterday we kind of came up into this zone after hours in the pre-market. We kind of tagged it a little bit before finding some support down here at this Bollinger Band and the 20-day moving average before absolutely just exploding today, right? So if you got long pretty much off the open, off the bell, over those pre-market highs, you made a decent clip. I hope that you would have sold for profits on the way up. Remember what I preach, guys, in the community. We get 1, 2, 3 pushes higher would have been here somewhere around that 384 mark. You definitely want to be taking profits. You can't be too greedy, especially if you're a trader, right? We're not looking to hit home runs here. We're just looking to collect a bunch of base hits. Now, obviously, we did get this pullback, but could this be just a break and retest here, right? Again, remember what I just said about eliminating the noise, right? I understand that the earnings on some particular companies is pulling down the market, but let's say, for example, I'm living in the Stone Ages and all I have in front of me is this chart here. I have no idea what went on with Microsoft's pullback. I have no idea what's going on with Google's pullback. I have no idea what's going on with any other stock out there other than the S&P 500. If I don't know anything else that's going on here, and I'm just looking at this from a pure technical analysis standpoint, I'm looking at a first test of this linear regression channel, followed by a lot of consolidation here in the after hours and pre-market on the S&Ps, and I'm looking at a nice clean breakout. Okay, a very clear elephant green engulfing candle, just absolute monster of a candle. I'm looking at a clear breakout followed by an algo-driven run-up, right? Again, before anyone starts to wonder, well, why did we continue to grind higher? Don't worry about that. Look at the 5-day moving average on the 1-hour time frame. We are power trending here. The moment to get out of this trade is when we lost the power trend of the 5-day moving average here. Or if you wanted to give it a little bit more slack, you could have used this 10-day moving average. Even with this, you would have got out around 382 from a breakout point of around 379. You still would have made $3 on the overall play. But if I just kind of don't really focus on what's going on with the other particular companies that are kind of dragging down the market here, this looks like a classic break and retest. Now, in order for us to say that we're going lower, this would have to close below 379.79 on the 1-hour time frame and get below this 50-day moving average. Okay, as long as the S&P 500 is over 378.42, which is the 50-day moving average, I am not concerned about the pullback, because the first thing that's going to happen to a newer trader or someone who is trying to chase this move is going to short this off the open. Experienced traders in Wall Street and hedge funds and institutional traders and prop firm traders are going to let you short this, get very, very happy, let you make a little bit of money, and then they're going to trap you, and they're going to trap you, and they're going to reverse this back, and then you're going to be left holding the bag. Okay, that's just the way that it works. If you understand the way that it works, then you can kind of do one of two things. You can wait for it to break this level here of this linear regression at around 379, close, and wait for a next hour candle to confirm those lows, and then take that and take your profits before they trap you here at around 378.40. Okay, or you can wait for the breakdown of the 50-day moving average, 378.43, let it close below, wait for the next hour candle to open up and confirm, and then take that and take profits into this Bollinger Band here, sitting at around 375. I hope that makes sense. If we do get the washout and the reclaim, again, I'm not looking to get long until S&Ps get back over 382.75. Over 382.75 is going to take us back up to this today's high around 385.25. I want to let it close over, let the next candle confirm that, and I want to take profits into 385, and then I want to hold that runner in case we do decide to go on an epic run. Hope that makes sense. I know this video was a little bit longer than usual. If you guys like this content, make sure to like, comment, and subscribe. Also, make sure to check out the Discord, guys, down in the description box below. My name is D. Anthony with EvolutionTraders.com. Just trying to give you guys an overall sense of direction from a technical analysis standpoint. Okay, let's get away from, especially for trading, let's get away from worrying about all of the outside news. I'm not saying that the outside news does not push the market one direction or another. We obviously know that good earnings or bad earnings or mixed bag earnings are going to push the market. We obviously know that higher inflation is going to push the market higher. We obviously know, or push the market lower. We obviously know that higher interest rates is going to drive the market, in one direction or another. We obviously know that the next Fed talk or Fed meeting minutes are going to push the market in one direction or the other. But you know what I do know? I do know that even with that, it still has to get through my technical levels, which can also be your technical levels, and we can use that to our benefit. Okay, hope that makes sense, and I'll catch you guys on the next one.